Guys, welcome back once again. Now today I'm going to be sharing with you an idea that I believe will help you understand or look at daily bias a little differently. Now, if you've been trading price action or smart money, one of the biggest and repeating problem or difficulty that most traders face, at least I know that I faced this problem, was the idea or the problem of daily bias. Now, I would walk in every Monday or Tuesday not knowing where price would go. Even with all the knowledge that I had about price action, I still couldn't pinpoint with a certain level of certainty where price was heading to. Well, that's the essence of this video. I'm here to help you unlock something. I don't think this is going to be a standalone idea, but will rely on your understanding of price action to make it work. But this could just be what turns on the light bulb for you because it works. Now, let's just get on to it. If you look at the euro dollar right here, over the last 3 or 4 months, you'd basically understand that we are in a bear market. This is a bear market, no questions asked. Now, that's the very first thing you need if you are going to open or just go in on a particular day to identify what price is going to do or the daily bias for that day. There's 3 steps that I'm going to add to your already existing knowledge of price action. 3 things. Now, if you haven't watched the previous video on hours and big figures, the link to that video is going to pop up now. I want you to go and watch that video because that's going to be the foundation of what I'm going to be talking about today. Now, there are 3 rules that will rely on your pre-existing understanding of price action to understand this idea that I'm about to pass across to you. But first, we must understand the sentiment. We must understand the outlook on price on a macro scale, and then we can zoom in and go into the lower time frame or the hourly time frame to tell what the daily bias would be or have ease with the daily bias. It'll be a lot easier to understand where price is headed for the day. Now, one of the very first things that I do is try to understand the sentiment. You cannot do without this. I want to understand the sentiment at least for the last 3 or 4 months. That's the very first thing that I want to do. And after I've done that and I've been able to identify the sentiment, of course, this is very clear. The market is making lower lows. So if you're coming here from a normal retail ideology, this is a downtrend. Of course it is. And let's say we were approaching this week. Now we're going to go to the 4-hour time frame. But before going to the 4-hour time frame, if we look right here, we have an imbalance laced with a previous low or a mitigation block, which the price reacted to. Now let's go to the 4-hour time frame. But before then, we'll go back to the daily time frame to establish something new or to establish something that you already know. Now, if we look at the previous month, we had a swing high into this area of the swing low, and that area would be a premium price, and the market sold at that level. Now we have a new swing and the price trade lower. We have a swing low. Now, how would I be able to tell what's going to happen next? Let's go to the 4-hour time frame. Now, on the 4-hour time frame, let's back it up a little bit. Okay. Upon this reaction down to this area, now let's bring back this range all the way, the swing high. That's a swing high, and price trading to the lower side of that swing high would be a discount price. We would be at a discounted price level. And so at that, it's a lower price level, and we would expect price to trade higher or take out previous lows from there. This is a normal idea in smart money. Now we started to see price trade higher. How would I be able to tell if I was on this side of the chart? Because we all have the benefit of hindsight, and you could say, well, this is all hindsight. How would I be able to tell what's going to happen next? Of course, I'm not going to be able to tell what's going to happen next, and I don't need to know. But what I need to ask myself, which is the second question here, would be, how did the price react to the previous big figures? Now, this chart all by itself wouldn't make any much sense. You'd see price reacting to various levels like this area, and it wouldn't make too much sense to you. But if you ask the second question, how did price react to the big figures, as we call them, you would begin to get an idea of what the intention is. Now, I want you to look at this reaction right here. In a moment, we're going to break all of this into the 24-hour period, and you're going to know how to identify or look for daily bias. Now, how did the price react to this level? Well, of course, this was an imbalance right here. and this was a reaction. All right, I want you to mark that because we're going to come back to that. But going back to our second question, we ask ourselves at the start of every week, how did price react to previous institutional levels, price levels, psychological levels, institutional levels, big figures, hours and big figures. I call them big figures, all right? How did the price react to those levels? And then you'd begin to get a different picture on price. Now, in a moment, I'm going to switch and bring in the big figures so that we can have something clearer to look at. And now we're back with the big figures. Now, if you notice, you can actually start gauging and looking at how price reacted to various big figures or mid figures. Now, if you look here, if you don't already have this particular template or the indicators that I'm using here, go back and watch the previous video. All the details were stated there. And if you still don't have it, you can actually visit the free Telegram channel. The details to get this indicator is in that channel. So going back to what we were talking about, now I've brought in the big figure. Now, if you look carefully, if you have been using this template, if I sent you this template, you can see that I don't have all of the big numbers here. I only have the 0 big figure, the 50 mid figure, and the 0 big figure. So basically I have intervals of 50 pips each. So from here to here is 100 pips, 100 pips, and it continues to go that way. All right. So that is what I want you to pay attention to. We're going to be using these levels on the weekly basis to gauge price. If you look carefully, you'd find out the low and the high of the week for most of the weeks occurred around these levels or these levels. The low or the high of the week occurred around these levels or around these levels. Okay, what does that mean for daily buys? Just in a moment. Now, that being said, we already established the fact that we are at a discount price level and we would expect price to trade higher. That is a sentiment, but this is an overall bearish marketplace. We would expect price to trade into a premium price, and if you look carefully in here, we have an imbalance. We also have an imbalance here. All right, so now let's go to what we're going to do is we're going to mark this area as the start of a week, and we're going to also mark this area as the start of a new week. Now, having marked these areas, let's go to the daily time frame. Now, we've already done the most important thing, which is identify the sentiment, understand what area of price that we're at. Are we at a previous level of discount, or are we at a level of premium price? Now, we've identified that and we go into the week. Here is where you start to play the game. And the third part of what I want you to do is you want to look at how the price reacts to the big figures at certain times of the day. Now, we are looking at the 1 hour time frame at the start of the week. This is where the week starts from. I want you to look at how price reacts to the big figures. Sometimes you might have to wait till Tuesday to get a clearer view. Now, if we did that and we waited for Tuesday to come, what do you see here? Because this would have been Tuesday's trading. What would you see here? Now, price traded energetically. So what I want you to note next is we're looking for price to trade away or to, or just react to big figures violently. That's how you can tell what you should see for the rest for that day. How does the price react to the big levels? That's where your bias for the day lies. And this doesn't just mean that how does the price react to the big levels every time, but at specific times. This is where we bring in the hours theory, time and price. Now, bringing in the hours theory and the indicators, here's what we have. You can actually see the areas right here. So what we're doing is having identified the sentiment on the higher time frame and understanding where we expect price to reach for. What we ask ourselves every day is how does the price react to these areas? Now, here's the theory. Big institutions every day are doing business within the Forex market, and they're doing these businesses across specific price levels. That's the theory. Now, this right here is the London kill zone right here. within the London kill zone, how does the price react to our price level? Well, of course, we can actually see the market progressing. There was a break of structure right here. Price traded into the 20 or the 80 big figure or the 80 institutional price level. Right there, the orange line that you can find here is that price level. Now, upon trading in there, how did the market or how did price react to that level? Of course, we already identified, or we already know that we're heading downwards. How did the price react to that level? Well, it traded lower, and then there was a break of structure once again. And then what did we see during New York? During New York, there was just a rebalance of that structure. That's just that, a rebalance of that structure. The second example is Tuesday's example. How would I be able to tell what to do or the bias for the day? I honestly don't need to worry too much about the bias for the day. All I need to ask myself is, how does price react to the big figures? And I can actually start looking and getting setups around those areas. So basically what I'm trying to say is this, and you can try to prove me wrong if you can. And the only way for you to prove me wrong would be to go to your charts and look this up. Take the ideas that I'm sharing here and go check it out. It happens every single day. I'm not saying you're going to make money every day. I'm not saying you're not going to lose money if you use what I'm showing you or apply that. You probably will lose money, but you will definitely see that what I'm saying here actually happens and happens every other day. Now, on Tuesday's trading, what do we see? On Tuesday's trading, we saw price trading back after this move down. What was the reaction here? Of course, we're not looking for anything other than our kill zones, New York and London, respectively. Now, during London, what do we see? Remember what I said? We're looking for the market reacting energetically away or from the big figures. And during London, we saw a reaction. If you don't know this, these are the levels, the price levels where some of your setups, these setups right here that you can see on the screen, form. By themselves, they mean nothing. But when they form at these price levels, they have intention. When we look at price trading to the 80 big figure or the 80 institutional price level and trading away, rejecting it energetically, that is the point. It tells us of what we call intention. Now down here, we also have the 20 big figure. I'm going to bring that in because I took that off manually or automatically because I didn't want the chart to be all messy. So right here, we have the 20 big figure. So that being said, during London, we had price trading into the 20, the 80 big figure, I beg your pardon, and price traded lower. Now, if you go to the 15-minute and try to figure out what happened, this is what it looks like. Remember what I just said a while ago, that these setups form at these levels. The setups that you are looking for, what you call them, you probably call them a change of character or the shift in the market structure. There's a high followed by a manipulation, okay, the rate of the previous high, and then the break of structure. And you call that a shift or a change in the character. Your shift in market structure, those setups that you're looking for that trigger a return to an order block or a return to a fair value gap or an imbalance, these setups form as a result of the reaction at these levels that I just pointed out. And this is how you could actually identify and know what to expect for that day. Having done your homework to look at what price indicated on the higher time frame, your high probability setups, like I said in the previous video, form around here, and it starts from the reaction to those price levels. If you think that this is a joke, you have the resources that I'm using in this video. You could go to the charts and look them up. Look them up, and you'll find this repeating over and over and over and over again. The high probability setups occur and form at these levels, and the signals that you need is, number one, the very first thing is asking yourself, how did the price react to these levels? The 50, the 20, the 80, or the 0 big figure. And in this case, it rejected and traded energetically away from it, returned during New York and traded lower, created the same setups that you're looking for. Once again, you see that setup right there. Price trades into an imbalance right here, and returns. Now, the idea of this particular type of trading isn't about picking the top. I'm not showing you this just so that you can pick the top. The idea is this: if you understand that the market reacting to these levels, or price reacting to these price levels, indicates a particular action, you could be short after you have been able to confirm that. On the 15-minute time frame, here's what I mean. When price does this, it's rejecting the highs, and it does so at a critical price level. These levels mean a lot. You could be short here, but I understand if you trade smart money, you would want to pick a trade where you have very limited risk, or you have a very calculated risk. And that's where New York comes in, because everything that you're doing happens within certain times and within certain price levels. The following day, what happens? We have price, go back to the 30-minute time frame, we had price traded into this area. But before it did, I want you to see the reaction here. Price traded in here and traded higher and moved more than 50 pips, or moved about 50 pips into this area. But I'm going to be targeting this area. How did the price react to the zone, the zero big figure? How did it react to that? Go to the 15-minute time frame, break it down to the 5-minute time frame, and I want you to see this. The setups that you're looking for will form at these levels. Price trades into that area, rejects the area, trades down, break of structure, returns to an order block right here, or a supply zone, as you would want to call it. And what happens next? Trades lower and lower during New York and back down here. It did over 80 pips or more. If you check how many pips that was 87 pips. Now, don't take my word for it. I want you to go and look at this. You already have an idea as to how to check and understand what to see or what to look for when you look at bias for the day. But you have to add your understanding of price. The following day, I want you to see how price traded at the zero big figure. I want you to watch. It forms these structures that you're looking for at these levels. And that was also an order block level. And if you go to the lower time frame, you have an order block right there. Just right there, you have an order block. And price traded in there. The structures that you're looking for formed in there. And it took out from there. And this is the reason why I said you do not have to pick the absolute low. But of course, your idea or your understanding of price action must come in. You have to look. We're not looking at how price reacted to the big figures at these areas. We're not looking for that. We're only asking ourselves, how did it react to the price levels here and here during specific times, especially during London and New York? How did it react to those levels? And when we see that, and when we see how it reacts, it forms our bias for the day. They form structures or setups that point to reversals or continuation. That's all about that. How does the price react to the big figures? That gives you an idea as to how to take bias for the day. We're going to look at one more example or two more examples, and then I'm going to end this. Now, I want you to look at the Euro Canadian dollar. For some reason, this has become one of my very favorite pairs to trade. I don't usually trade crosses, but this is one that has a special place in my heart at the moment. Now, I want you to look at this. This was on Friday the 24th of June. And I want you to look at the day before that. The day before that, we had a very huge reaction. And I want you to see, when did that happen? It happened during London at the big figure. Price did 100 pips really fast. Now, if you check and bring in this, we're going to mark the smaller levels. And so right here we have the 20 institutional level. And I want you to ask yourself, what structure do you have forming after the reaction to this level? Remember what I said. Ask yourself, how did the price react after that level? Did it create a structure just like here? Did it create a structure? Did it react? Was a huge displacement basically. And right here we had a huge displacement. Don't take my word for it. It happens every time. If you check the previous day, I could show you an example for every other day. What this means is that all of the setups that you're looking for, this is where they occur. You have to start looking at the right place. Your idea for bias should start from understanding how the price reacted to these levels. What was happening at these levels? This was the 80 institutional level. What happened there? There was a huge displacement. If you go to the 15-minute time frame, that happened during New York. If you break that down to the 5-minute time frame, right there, it forms the structure that I just showed you earlier on in this video. These are the areas where your trade setups occur. Very first thing you want to do is ask yourself, how did the price react to those levels? You have to apply your understanding of price action. How did the price react? There has to be a huge displacement. Price has to trade away from those areas violently and energetically. This is how you can form a trade bias. And it happens at specific times. So we're not looking at things outside these two time windows. These are the only things that we're looking for. Now, let's go back to the example that I was showing you. And here we're looking at the 15-minute time frame. We have this structure right here. We had a low, price took out that low, and there was a change in character. Or we could say there was a shift in the structure. Price traded higher, returned into the order block, and traded higher into this zone. How many pips would that have been? 54 pips. And now let's look at the following day, which was Friday. This is the 80 big figure. Price reacted to this order block. Where does your high probability setups form? They form after price must have rejected or reacted violently to one of these levels. That's where they form. Now, when we bring in our understanding of price action, this whole price behavior happened at the premium price of this entire range. And then what did we see from the 80 big figure? Price rejected and continued to break structures and a return into this area right here. And you can see a trade that I took on based on this particular idea. Well, it's not your typical type of trade, but it's crazy. This happens every time. I encourage you to go study it, apply your understanding of price action. Like I said, it's not a standalone idea. You need to study it, and you can actually apply this. I'm not able to trade every day. I don't like to trade every day, but I like to be able to pick the best trades that I can get when I intend to trade. And if this has really been helpful, I want you to slam the like button, like the video, hit the subscribe button. And if you want more of this, you can actually join the free Telegram channel. The link will be in the description, or if you wish, you could be a part of our private channel on Discord. And that's going to be it for today. That's what I have for you today. And I will see you again sometime in the nearest future. Until then, stay profitable, guys.